Hey everyone, it's David Wickwire with the Wickwire Group. Of course, I am a licensed realtor, but also a licensed lender, here to give some lender/finance advice based on recent market movement. As a lot of you I'm sure know, the inflation number, which a lot of people expected to hopefully flatten out or go down, actually went up sharply from 8.6% to 9.1%. So inflation's still on the rise despite recent activity by the Federal Reserve to try to curb it. Back in June, the Fed raised the Fed funds rate 75 basis points in hopes of stalling out that inflation number, but obviously it didn't work. So the Fed meets again July 26, 27, just a couple of weeks. And a lot of people, including myself, think that the Fed's going to have to raise the Fed funds rate 100 basis points or 1 full point. So that's obviously going to have a big impact on interest rates. In some ways it already has, because when the inflation number comes out at 9.1%, lenders know that the Fed is going to have to raise rates, and they actually kind of raise their interest rates up in anticipation of that. So probably half baked in already with rate increases over the last couple of days, but more rate increases coming, especially if the Fed does raise a full 100 basis points. So, really, we're running out of time here for action. So there are some really good options though out there. Everyone's been getting into 30-year fixed mortgages, but that's just not always the best option right now. When rates go up, there's a lot of programs that come around that may have disappeared before because 30-year fixed was so low. But now there's some programs that are back, the 5-1 and 7-1 programs. They're 5-1 and 7-1 ARMs, which are adjustable rate mortgages. But the difference with these is that your rate is fixed for either 5 or 7 years before it can go adjustable. And 5 to 7 years is a lot of time for interest rates to finish going up, settle back down, and give multiple opportunities, in my opinion, to refinance to a low 30-year fixed rate. So a great option, usually about 2%, maybe even more, lower than the 30-year fixed rate, which can give you an affordable monthly payment and allow you to get into the home that you really want to get into. So that's something to discuss with your lender. Great option. And for sellers, the market is still strong. House values are still high. This area here, the Northern Virginia, DC area, somewhat recession proof, and values are still strong. But if an actual recession hits, which usually corresponds to inflation like this, those values may start to drop a little bit. So time for sellers to act, and there's still some good options out there for buyers with the 5-1 and 7-1 programs. So give us a call here at the Wickwire Group and we'll be happy to help. Thanks.